association, 7 great associations joining together for the 17th year and the 21st budget meet. And this year, the post-budget meet includes the union budget, strategy, and the roadmap ahead for investors. Ladies and gentlemen, if I can say, I'm Mayar Dastur, General Secretary of Matunga Gymkhana, and it gives me great pleasure to welcome one and all on behalf of this extremely esteemed associations and in this moment of lingering crisis of the COVID-19 which is going on. Like all the associations, I can just say there are only 2 words which ring into our ears. One is COVID-19 and one is the great equity markets. So let's make the best use of it. A good crisis is always to be made best use of. So said our great Winston Churchill. So let's go ahead. I hand it over to our convener of the meeting, Hinesh Bhai Doshi, Vice President of the Chamber of Commerce and the past President too. Hinesh Bhai, can you take over?
Yeah, thank you, everybody. It is a great honor that we have 7 great institutions who readily joined, agreed. In fact, this is, as rightly said by Mr. Dastur, this is 21st meeting. We have been very lucky and fortunate that Mr. Mehrabun Irani and Kanubai has been always with us, even just one SMS away, and they agree to whatever we decide and on our program. Thank you, Kanubai. Thank you, Mehrabun, for being so loyal and patriotic. My thanks to Interact Foundation, Indo-Japanese Association. His president, Mr. Mehul Bua, is there right now on this panel. And other institutions like Matunga CP, Study Circle, Wellinger Institute, our IGF and Chamber. Friends, I am the past president of the Chamber of Tax Consultants. We are in the 95th year. Probably very, very few organizations have lived for 95 years. And we are going strong with almost 4,000 members. Very active, very young. Mr. Mehul Seth is the chairman of the Capital Market Committee and led by Ankit Sanghvi. I have with me from Matunga Gymkhana, Dr. Kishore Shah. I request him to just welcome the participants, followed by Mr. Narendra Mehta and Mehul Bua for just 30 seconds each. Yeah, thank you.
Good evening, ladies and gentlemen. We welcome eminent speaker Sri Kanubhai, Sri Mehrabun Irani, Sri Jimit Modi, and friends. On behalf of Matunga Gymkhana, we welcome eminent speakers and all of you. I request expert speakers to explain in a simple language the Union Budget presented by Finance Minister on 1st February 2021 on various relevant issues such as growth in infrastructure, increasing job opportunity, sustainable and inclusive economic growth. What are the plans suggested by Finance Minister to reduce inflation and to reduce fiscal deficit and current account deficit and make rupee stronger? Unfortunately, while there is no provision in the budget for educating people about the benefit of family planning, with these few words, I greet all of you. Thank you.
Thank you, Kishore Bhai. It is always said, diamond was just a lump of coal, which did very well under pressure. So I think our economy is also like that. Probably we are turning into diamond because of the pressure. And let's see how the speakers analyze this budget.
Yeah.
We now request the president of Indo-Japanese Association to just say something for 15 seconds, and then followed by Narendra Bhai.
Hello, everyone, and thank you for inviting us and our association to be a part of this discussions. I'm the president of the Indo-Japanese Association in Mumbai. which is a 65-year-old and oldest recognized association which does business with Japanese and promotes cultural activities in Mumbai. It was founded by in fact, by the of the Waseda University, the head of the Waseda University, where I graduated from. And we have almost more than 1,500 members now, including an Economic Cooperation Council, where we do try and do business and promote business activities with Japanese companies in India. There are more than 1,500 companies of Japan in India. And this budget also, if everybody has noticed, there was a special mention by the finance minister of doing, of skilled and unskilled workers doing work with Japan. That is the interest and that Japan and India share with each other, especially with Modi-san and Abe-san together. And we hope that it's some important part in developing relations between India and Japan to improve our economies as well. Thank you, Himesh, for giving us this opportunity.
Yeah, thank you, Mehul. Glad to see you. Narendra Bhai, 10 seconds.
Yeah, okay. Thank you, Ines. Only 20 seconds. Excellent budget. India on a growth roadmap. Bullish. Marabun will agree. A great opportunity for the people who needs to invest in a startup companies. Next meeting, we are going to have it on 10th February, 6:30 p.m. The necessary details will follow through Madunga Gymkhana and Chamber of Tax Consultants. Thank you, Ines, once again.
Thank you, Narendra. Mehul Bhai, I request you to take it further, the proceedings of this webinar. You are on mute. Yeah.
Sorry. Good evening, everybody, and welcome everybody on this meet on the capital market as well as the finance bill. I will touch upon the profile of Mr. Jimit Modi, who is going to be the first speaker for this evening. And to formally introduce him, Jimit Modi is a rank holder, chartered accountant, and also founder and CEO of Samco. Samco Securities is one of India's fastest growing and leading discount brokerage firms and was recently awarded as India's best equity broker by CNBC. In May 2015, Samco launched the country's first capital market league, Indian Trading League. Samco has a wide range of businesses ranging from discount broking, equity research, mutual fund research and distribution, and having received all regulatory approvals, is also in the process of setting up Samco Mutual Fund, a new age asset management company. Jimit Modi has a career spanning over 15 years with rich experience in equity research, investment analysis, technology and algorithmic trading. Besides being a chartered accountant, Jimit is also a chartered financial analyst from the CFA Institute of US. With these words, I will request Jimit to address us and enlighten us.
Thank you, Mehul Bhai, for your kind introduction, and thank you everybody for having me. It is a great pleasure and an honor to be here. I am just going to share my screen because I have a quick presentation. Is everybody able to see my screen?
Yes.
Yeah, we can see.
Yeah. Okay. So, I've been invited to talk about the capital market, the strategy ahead, and in the light of the budget that was presented yesterday. And I think the biggest question in people's mind is, why is the market up 3,500 points in 2 days? And, I have a small story to share so as to make it simple for people to understand. And the way I think about this is that, see, imagine if you are a bunch of parents, you have a bright child, who doesn't like to study. He doesn't typically do really well at exams. And, this year was even bad because you had COVID, you had work from home, there was too much pressure, loss of productivity, so on and so forth. And you thought that was okay, he's probably appeared for CA final, he's going to fail only. There is no chance that he can possibly pass because there has been so much wastage, so much lack of productivity, wastage of time, so on and so forth. It's impossible for this child to do well And so all your hopes are dead, and it's a really bad, grim situation. Things are very, very bad. And 1st February is the result, which coincidentally this time yesterday was actually also the CA result. But and in the result, you expected that the child will not get more than 30%. Surprisingly, the child passes with 65%. Not only does pass, he even in fact does far better than was expected from him. That is precise. And as parents, when you hear that अरे बॉस ये तो बंदा फेल होने वाला था, उसके सामने उसको 65% आ गए, तो गांव में तो हम मिठाई बांट रहे. That's precisely what has happened as far as the market is concerned. Just going into the budget for the past 7-8 days, we had a massive expectation of failure. That there's not a great track record of this finance minister giving budgets. What will they do? There will be a COVID says, there will be increase in taxes. There was chatter of a wealth tax, and there was so much pessimism and negativity that was, yeah, it's the end of the bull market, etc. And to everybody's surprise, she did nothing. In the sense, she did not tinker with any tax. She did a phenomenal job as far as not raising taxes, not introducing a COVID cess, no wealth tax, nothing. So it was an extremely gutsy budget, and she actually has outperformed by great numbers as far as the budget expectation was concerned. So precisely what has happened is we were 50,000 before, a few days before the budget on the Sensex, in anticipation of a poor budget, because anyway it was a COVID year, it's a washout year, things are so bad. She doesn't have any space to do anything. Even during the budget, there were a lot of memes that itna sab kharcha kar rahe, paisa aayega kahan se? So all those apprehensions were put to rest, and that is the reason why we have actually just come back up to 50,000. So all the negative that were expected from the budget actually didn't come through, and it is a classic case of no bad news is good news. And we've seen a great 3,500 point rally. Because this is about the budget, in terms of the way we call it internally, this is a jo hoga dekha jayega budget. The government of India this time has, in the manner in which the steps that have been taken, it's actually quite a gamble, and that's something that the markets really like, that the government has actually come out, made use of its position of strength, and given this budget. And broadly, in terms of why we call it a jo hoga dekha jayega budget, there was this artificial limit of the FRBM Act, that we had to get to 3% fiscal deficit, even though the world was far away from fiscal discipline. And there was a fear that rating agencies will downgrade us, Indian sovereign debt may actually get downgraded to below investment grade, so on and so forth. But the government said, jo hoga dekha jayega, we are going to keep fiscal deficit at 9.5% for this year and 6.8% for next year. We'll see what happens, and we'll hopefully make a case for no downgrades, and hopefully try and use growth to build a case for upgrades. They've actually gone ahead and said that we will do 2-bank privatization. We will privatize a general insurance company, even though there may be political backlash. They very clearly said that we're not going to increase taxes. We will fund the deficit with borrowing. The whole world is funding their deficits with borrowings. So why not us? And there is a hope that this will not be inflationary in nature. So I think, and they've said, okay, this is probably the only budget where the words Narega were spoken the least in the past 10 years. Where the more focus was on infrastructure, capital expenditure, roads, highways, and to some extent this was probably it would probably remind a lot of people of the budgets that were announced in 1990, towards the late 1990s, 2000 early, when there was massive infrastructure spending that was done by the Vajpayee government. I think this probably is reminding a lot of people of those times, which is why there is so much excitement as far as the market is concerned. And fortunately, to everybody's surprise, there was a hope that this government is going to be suppressed, but because of all the pressures of COVID, poor economy, weak economy. But they've actually gone out and done far more than they could have actually done, and that's why the market has been rewarding. Now, fact of the matter is, despite of this now 3,500 point rally, the reality is that the budget is over and now the budget has been completely discounted. So by discounted, I mean the budget is in the price. There has been a 7.5% move from the time the budget started till today's close. And if you wanted to think that this was any more a budget rally, the budget rally, so to speak, is over. So now, therefore, from an investor point of view, and because the topic is, what's the next strategy, and how can you as investors deal with this situation? And to just throw a little bit of background, before I go into and dive into what exactly should an investor do, I wanted to throw a little bit of light that this rally that we are seeing is not actually an India specific rally. If you see my screen, what I've plotted is something called as the emerging markets index, which is called the EEM. If you see, and the simple line, so the candles that you see are the emerging market index, and the straight line that you see is actually the India Nifty chart. Now, if you see, these are moving very much in tandem. Now, this emerging market actually comprises of a basket of countries which include India, China, South Korea, Taiwan, Vietnam, so on and so forth. So all these emerging markets are actually comprised in this. And the beauty is that there is a massive shift in trend that is happening in the world. I think after COVID-19, people have started to realize that smaller emerging markets are going to do really, really well. So India and a bunch of these other countries where which I named, will probably do very, very well, and which is why there has been a fantastic rally. So India has a 25% weight as far as this rally is as far as this index is concerned, and if you see, it's almost similar. So it's up 20% for the past year, and India is up 19.42%, so barely 0.5%. And what has actually happened is that this emerging market index, which comprises of all these upcoming nations, including India, has actually broken out of a very wide resistance of the 50 after 13 years. The last time that these prices that were seen in this index were in October 2007. So since after 13 years, we are seeing such a big move. And the way I'd like you all to think about it is that imagine that you put a bird in a cage for 13 years. And if the cage opens, you are going to see the bird try and fly away as much as it can. That's the kind of behavior that we think will be exhibited. And the trend for India and all the other emerging markets is firmly up. So it's not got to do only with the budget, but I think broadly we are in the beginning of a massive bull market that is coming in all emerging market countries after a good 13 odd years. One more thing, I think, a lot of people actually have said that PE ratio is expensive and how can we end up buying in such a market? Itna chal gaya hai, so on and so forth. And I think there are a lot of CAs here, and one of the most fundamentally different things that have happened this time as compared to any other time is that interest rates are abysmally low. Almost in the world, even in India, interest rate, FD rates, if you try and do for large ticket sizes, the rates are between 3.5%, 4.5%. These are the rates that have not been seen. So the cost of capital is very, very low in the markets today. And I actually just put a simple discounted cash flow equation up on the screen to help on a lot of chartered accountants here. So if you realize, if you keep reducing interest rate to almost a sub-zero level, in fact, in certain countries, European countries, interest rates are actually even negative. When you punch in such a low discount rate number, valuations can actually go over the roof. In fact, mathematically, they could even go to infinity. So reality is that don't worry too much about valuations, because it's going to be expensive. We are living in a time where interest rates have never been so low for a and it doesn't seem that they're going to come up in a hurry anytime soon. So they're going to remain low for the foreseeable future, and which is why equity markets will continue to be expensive. So if you can think that you are going to get a chance to get in at lower levels, so you think 10,000 Nifty aayega, 10-11,000 Nifty aayega. I think that is all history, and people need to move on beyond those expectations. I think what this means is that, again, as I said, we are in a massive bull market. And as long as interest rates don't go up, and it doesn't seem like they're going to go up, because there is so much technology that's happening, which is reducing prices of commodities and goods and services across the world. We this time, in fact, we've had a massive bull run in equities, but which has not also culminated in a bull run for crude oil, because crude is seeing so much supply pressure because of move to electric vehicles. So globally, technology and economies of scale have actually resulted in declining prices of all goods and services, and which is why inflation is which is why most countries are struggling to have inflation about 1.5-2%. So interest rates are not likely to go up, because this is a bull market, and this is going to be a bull market. We've seen a great 7.5% rally in the past 2 days. Bull markets corrections are probably going to be one of two. They will be swift and sharp. So like we saw in mid-January, in 10 days, the market will fall 8-10%. And that's it. If you get in, you get in. If you don't get in, don't get in. I have a very famous example when I say, as far as bull market rallies, think about it as a train going from Churchgate to Borivali. It will stop at every station, material station, for a few seconds. If you are not able to get into the train is gone. It will stop at the other for some time. If you don't get into the train, it will be gone. So there will be sharp and steep corrections in the in this bull market. And if you get a chance to get in, you have to get in. Secondly, or there may be a time where there could be some sideways movement. So there could be a possibility that we are at 14,500 on the Nifty, 50,000 on the Sensex. We stay here for a good 3-4 months, consolidate sideways, but don't expect a crash. I don't expect that there will be any more crashes that will be coming. The crash is behind us, and market is not going back to any lower levels. So we firmly believe that the floor of the market is at 12,500. That is probably going to be the long-term floor of the market for the next few years to come. Now, also, I think, why do we think that this rally would continue? People saying that 50,000 ho gaya Sensex, 14,500 ho gaya Nifty, to bhi ye kyun continue hoga? I think some of the differences between this rally and some of the other euphoria-based rally was that this rally, the retail and HNI segment has not participated at all. Nobody has understood the speed of this rally. Everybody, in fact, everybody that I speak to got out of the market at 10,000, 10,500, 11,000. सब लोग को लगा अरे अभी तो बहुत हो गया, अभी तो बहुत हो गया, 7.5 का 10,000 हो गया, बहुत हो गया, 10 का 11,000 हो गया, बहुत हो गया. Saying this, everybody has kept redeeming money, and not allocated fresh money. So actually, the entire retail segment has got left out in this. And never have we seen a bull market rally come to an end where SIPs are declining. So if you see SIP trends, they have been declining since the past 12 to 18 months. So ऐसा कभी भी नहीं हुआ कि भाई SIP लोग बंद कर रहे हैं और bull market खत्म हो गया. So we believe this will continue. Even speculative trading activity बहुत कम है. If you see today, the majority of the trading activity continues to be in the good quality names. IPO activity is hot at the moment, but it's nowhere close to Reliance Power level. So we are not seeing that companies which are paper companies or small companies doing really coming in at obnoxious prices. So, and mutual funds continue to see redemption. So we believe that, and finally, there is complete disbelief, is that there is so many, every day I meet somebody who is complaining that boss, economy to itna kharab hai, on the ground situation itna kharab hai, to क्यों market बढ़ रहा है, and you keep seeing memes that stock market and economic activity are completely divergent. All these factors lead us to believe that this is actually only the beginning. We are not closer to the end, because none of this actually happens if the bull market is coming to an end. So point that I'm trying to make is this is the beginning. If you get in a chance to allocate money, please go ahead. One thing that, from a long-term investor point of view doesn't change is that, see, if you're putting in money in 2021 and you want to make reasonable amount of money in the next 5 to 6 years, by 2026, and you want to compound your money, you will have to invest in good businesses which make a higher return on capital over and above their cost of capital. Even though cost of capital is low, but I think consistently you need businesses to make a higher return on capital. So having said this, what should be the strategy? So what I've done is allocated strategy for people into two buckets. One is that if you are fully invested, and when I mean fully invested, it means that if you have already put a lot of your money in the market, you don't have substantial cash, you are fully invested, then what should you do? What should be your strategy? First, we firmly think that use this bull market to correct your mistakes. I think people have made a lot of mistakes as far as the bull markets are concerned. You had penny stocks. You may have seen penny stocks जिसका अभी भी भाव ऊपर नहीं आया. You may have seen bought 10-20 rupee stocks जो 5-6 हो गया रहेगा, नीचे 2-3 रुपए हो गया रहेगा. अभी if they have come back up to 8-10 level bucks, use these bull market to correct your mistakes and get out of your poor quality stocks and move to better companies, because that's what's going to compound. A bull market will misprice opportunities because there is going to be a hope that there's going to be a massive cyclical rally in metals, infra, so on and so forth. So you will actually get a lot of long-term compounders at good prices. So use this bull market to correct your mistakes. Number two, get rid of all the small stocks in your portfolio. So in your portfolio, if you have any stock which is less than 1% of your portfolio, please get out, because it's not going to make any material impact for you to make money over the long term. Third, look at pockets of long-term compounders, or value in long-term compounders. And what do I mean by this? Is that if you look at the behavior of banking stocks yesterday, a Kotak Bank was up only 2.5%, 3%, whereas an SBI was up 10%. Now, what is this? This basically is a short-term euphoria where people believe that, over a very long period of time, PSU stocks will do well, and the compounders of the likes of an HDFC or a Kotak, etc., may not do really well. But over the next 5-year period, trust me, the compounders of the past 5 to 10 years will only continue to do well. So make use of these mispricing opportunities. If you have SBI in your portfolio, reshuffle it out, make use of this rally and move into stocks which are being ignored by the market because of the short-term excitement and euphoria. And I think finally, fourth thing for investors who are fully invested, please keep your expectations low. See, we've not had a negative calendar year since 2015. When I mean calendar year, January to December, 2016, 17, 18, 19, and 20, all last 5 years have been positive return years, where investors who invested on the 1st of January ended up having some material gain on 31st December of the year. At some point of time, there may be a possibility that the market's going to a longer term sideways correction. So even if you are invested, please don't expect that you will keep getting 20% or 15% on a year-on-year basis. It's very likely that over the next 12 to 18 months, you may see 6 to 8% returns, or in fact, you may even see a small negative return or a small drawdown as far as the markets are concerned. So keep your expectations low. Is scenario 2, if you are underinvested, meaning if you had 5 lakh rupees to invest and you kept saying that मैं तो crash आएगा तब invest करूंगा, crash आएगा तब invest करूंगा, मैं पैसा, I want to keep waiting for a crash. For those people who have missed out this entire rally, my humble submission is that if you keep hoping of that the market will fall, you will be left in a similar situation to 2004 and 7. What happened between 2004 and 2007 was that the market kept defying logic, kept going up beyond everybody's expectation, and people who missed it were never able to get in through that entire rally. So my humble submission is, if you are not invested, please at least start an SIP to start investing in the market and allocating smaller sums of money. So if you want to invest 5 lakh rupees, my recommendation is start with 1/20th of the sum as an SIP. So start with 20,000 or 25,000 rupee SIP, and so that you are able to at least get some average return. And I would not recommend investing 100% of the money in today, because we've seen a massive run up. But if you have 5 lakh rupees, please invest 1 lakh rupee, almost 20-25% of the money you invest in today's market, and hopefully try and see if you get any fall up to 400-500 points. And there will be corrections. It's not that this market is going up vertically. There will be corrections from time to time. But when you get a correction, please don't wait for a further lower correction. That's all I'm trying to say. So at every 500 point difference, with discipline, allocate additional 1 lakh rupee. So 1 lakh rupee at 14,500, 1 lakh at 14,000, 1 lakh at 13,500, 1 lakh and 13,000, so on and so forth. So that's how you should allocate your money. One important point, and we happen to be one of the largest brokers with customers from over 5,000 cities. And one behavior that we are seeing recently is that a lot of investors are putting out money from mutual funds and trying to directly invest in stocks. My humble request and submission to everybody is, if you cannot invest your time of at least 3 to 4 hours every day managing your investments, catching up on investments, doing research or trading, in such a case, please give your money to a professional fund manager. If you cannot find the time to do the hard work yourself, because if you are going to invest in direct stocks, you're the fund manager yourself now, and you have to give that time. You've got to put that effort. And if you're not able to give it, because it's a full-time profession, so if you're not able to give in that time, you could please allocate your money to a mutual fund manager. If there are a variety of flexi cap funds that you could look at, large cap funds you could look at. Even if you don't want to look at active funds, you could even look at a low cost passive index fund and participate in the rally that will happen over the next few years. But it's very important that if you don't do direct stocks, it's completely okay if you allocate money and participate in this bull run via the mutual fund route. So I think that was scenario number 2. Finally, I think just I'll take a couple of minutes before I conclude, is that some of the big trends that we see are playing out. If anybody wants to look at stocks and sectors, I think there are these 4 big mega trends that we are seeing, which will really result in a lot of wealth creation over the next 5 to 10 years. First is that there is massive shift of unorganized to organized business. I think one of the reasons why our FM is extremely confident about tax collections is because there is a lot of market share shift happening from the small mom and shop kirana stores to organized players. So the biggest beneficiaries of this movement of smaller players getting out and bigger players becoming bigger. So that's the trend that's going to play out. Smaller people are going to get smaller or get killed, and the big people are going to keep getting bigger. And the best way to play it is FMCG, consumer durables, organized retails. So, for example, one DMart is probably going to eat the livelihoods of 200 odd kirana stores or smaller vendors in a small city or in a location that they open up. So this trend is something that you'll have to play. Second, we believe that there is a massive shift from physical to digital. People after 2019 COVID have realized that, boss, we don't need to have so many stores, we don't need to have so many physical offices. सब काम जूम पे होता है, हर बार फ्लाइट में जाने का भी जरूरत नहीं है, एक एक घंटे की मीटिंग के लिए काम आराम से जूम पे हो जाता है. There is a massive shift to the digital markets that is happening. So, and the biggest beneficiaries are going to be IT and ITES companies. So over the next 5 years, you should look at this sector very, very seriously. The third trend is, I think there's massive financialization of savings. Interest rates, as I said earlier, are low and will continue to be low. And which is why people are going to put money in insurance, asset management companies. They're probably going to invest directly in equity. So, and these sectors will immensely benefit from the trend of financialization of savings. And there is going to be a movement to personal mobility. I think what's going to happen is that after COVID-19, people realize that, boss, abhi khud ka vehicle hona zaruri hai, khud ka for mobility, and which is why we see 4-wheelers and 2-wheelers will also do really, really well. So I think these are some of the big trends that people can look at and play out over the next few years. And finally, what could puncture this rally bull market that we are talking about? What is the risk? I think there are 4 key risks which all investors should look at. One, if there is a sudden rise in commodity prices and global inflation, then there will be an increase in interest rates. Increase in interest rates are the single biggest reason why this entire rally could actually puncture and we could see lower levels in the market. So I think that's something that people need to watch out for. The government is going to borrow a lot of money. So 12 lakh crore, they said they're going to borrow. And if they borrow in a haphazard manner and in an incorrect fashion, then there is going to be panic in the debt market. So hopefully, people have to keep checking that the government borrowing program is balanced. Third is that if there is any increase in corporate global tax rates, so the Biden-Harris administration has been very clear that we want to look at increasing corporate taxes in the US. If that happens and then all other countries start following suit, then we could be in trouble. So that is another factor that could result in trouble. And because of this global liquidity, a lot of people, everybody's got hungry to do primary issuances and IPOs. So everybody wants to right now do an IPO, make use of this bull market. So even the government has said we will come out and raise 1.5 lakh crore. If they come and raise 1.5 lakh crore, it's going to mean that a lot of liquidity is going to get sucked out from the market. And if that liquidity gets sucked out from the market in a short period of time, then we could see some this rally getting tired and some dwindling as far as this rally is concerned. So I think these are the 3 or 4 key risks that could puncture this entire large bull market that everybody's talking about. So that's it from me, and thank you very much. I hope this was informative. And final closing thought is markets are elevated. Sensex is at 50,000, but you will have to take certain risks in certain pockets if you want to make money. And to close with a quote from Harshad Mehta's scam series, risk hai to ishq hai. That's what's going to be the status of the market for the next few months or so at least. Thank you.
Thank you, Jimit. It was wonderful. Yeah, Mehul bhai.
Yeah, we will now request Anuj to formally introduce our next speaker, Mr. Kanubhai Doshi, and then Kanubhai Doshi will share his thoughts.
Yes.
Over to you, Anuj.
Yes, thank you, Mehul bhai. And thank you, the organizers, to present me this sheer opportunity to introduce Mr. Kanubhai Doshi. And his association, as rightly mentioned by Hinesh Doshi, spans over last 17 years with the Capital Market Study Circle, and he has been a regular speaker at each of the previous 20 budget sessions which has taken place at the Capital Market Study Circle. Kanubhai Doshi is a senior member of the Chartered Accountant Fraternity and is presently a Professor Emeritus Finance at Wellington Institute of Management, which is now known as V School at Matunga. And he teaches corporate tax, planning and allied subjects in business management course. Till recently, he was a Dean Finance at V School since the year 2002. Apart from the academia world, he has also been on the boards of several companies, including being an independent director at Reliance Nippon Life Asset Management Limited, Edelweiss Asset Management Limited, and Motilal Oswal Asset Management Limited. He's also been a tax advisor to Unit Trust of India for several years, beginning 1982. Presently, he's a director on the board of Semco Ventures Limited. He's a co-author of various books, including books on tax holidays, financial accounting, and special economic zone. Over past several years, he is also a member of the governing council of Forum of Free Enterprise. He is also an active Rotarian. With these few words, I would now like to invite Mr. Kanubhai Doshi to address our participants. Sir, we are eagerly waiting to have your thoughts. Over to you, Kanubhai.
Yeah, thank you for wonderful introduction. Dastur Sahib and all the wonderful office bearers of 7 wonderful institutions which have combined together for today's Zoom meeting. It's a great pleasure to have the faces of all the wonderful friends, Jimit, Mehrabun, and above all, I'm sitting in the offices of our Vice President of IGF, Mr. Hinesh Bhai Doshi. So, coming to the topic for my allocated subject. Now, the most awaited budget of this government has finally landed before us yesterday. In a very unusual departure from maintaining a very diplomatic, customary silence by a finance minister about to present a budget, Nirmala ji went out of her way to literally announce weeks in advance that she is going to present a budget, and I quote her words, like no other budget in the last 100 years. Now, this was very unusual that we were feeling that why is she saying that? Now, true to her claim, the budget has been unanimously welcomed across the board from the stock markets, and we heard Jimit telling us that in last 2 days we have seen the rise of 3,500 points. So virtually today, the amount 50,000 was also crossed. It so happened that it ended at 49,797. But the point that Jimit made, and all of us are inclined to agree with what he says, is that this bull run is there for us to stay. So the budget has been welcomed by the stock market, by the top bankers, senior corporate captains, as well as by a common citizen. Now, the biggest undercurrent for the favorable response, unanimous and almost simultaneous, almost spontaneous, is at the end of the budget speech, we had a sigh of relief that there is total absence of any additional or any increase in the direct taxes. For example, we were all reconciled to keep our money ready to pay for the COVID surcharge, or perhaps reintroduction of wealth tax on selected assets like equity shares, keeping in view the bull run, or the billionaire tax. Nothing of the kind happened. And by and large, all direct tax rates have been totally left unchanged, providing a smooth continuation of the present rate of tax. Now, this itself is a very welcome sign that, as Jimit said, no news is good news. So, thank God there were no bad news. Now, the initiative coming to the direct tax provisions, which normally Hinesh Bhai and Dr. Kirit Bhai request me to cover, and my reaction was something like what Jimit mentioned about a naughty kid who was expected to fail in the final CA and surprisingly passed, and therefore called for big celebration. So, somewhat similar is my feeling of a naughty schoolboy who was, the whole entire class was asked to write an essay on cricket match. Here was a naughty student who gave virtually a one-line essay, heavy rains, play abundant. So he got away with that. So this is what we also got that feeling. And my reaction to Hinesh Bhai was there is hardly anything, Hinesh Bhai, to speak on direct taxes. But nonetheless, since you all have spared your valuable time, I must share some of my thoughts. So the initiative of faceless tax assessment, income tax assessment, introduced about a year ago or 2 years ago, extended to appeals, and now this budget is further extending to the income tax appellate tribunal also. We all know the basic rationale behind this faceless situation, and that is the corruption part. Uh, Minor irritants like dividend distribution tax affecting REIT and INVIT. Uh, these irritants have been done away with, full marks to the finance minister. In sum, the budget is bound to trigger big infrastructure spending because we saw what large amount has been allocated towards infrastructure spending. And the beauty of infrastructure spending is that it generates not only financial prosperity, but all-round prosperity, including the roads, the multiplier effect of a good transport system that generates. So, like the entire country, we also join in congratulating the finance minister for a real innovative budget like no other in the past. So, with this few words, thank you very much for listening to me so very patiently. Thank you.
Thank you, Kanubhai. I now request Mehul
Sir,
Bhai.
one minute, Dinesh bhai.
Yeah,
There are two questions
yeah,
for on direct taxes.
Yeah.
But
yeah.
Mr. Praful Shah said that can you explain in changes in ULIP?
In?
In ULIP, ULIP.
Yeah, it has been brought in line with the mutual fund. See, earlier we all know that ULIPs, compared to mutual fund units, enjoyed a advantage. Now that advantage has been taken away, meaning the proceeds from ULIP, when the policy matures, your term gets over, the entire money being insurance money was exempt in our hands. Now that will not be doing. But the way, for example, mutual fund proceeds to the extent of capital gain is taxable. So same way, this in ULIP will happen. This was a long-standing request of AMFI to the finance ministry, that how are you distinguishing us? Virtually it's the same product. In fact, the irony is the monies collected by insurance companies under ULIP plan were invested with mutual funds. So now in short, they have put them on level playing field.
So there is one more question.
Yeah.
Need to know VPF interest limit of 2.5 lakhs. That PF is now about 2.5 lakhs. Is the interest is taxable?
Correct.
So please, if you can throw some light on that also.
No, the rationale is very simple. That when the amount is as large as that, by definition, you are in a very high tax bracket. Therefore, the government should not subsidize you. So the return that such a person derives must suffer tax. So that's the rationale. That's the rationale.
So will it be only on employees' contribution or will it also be on employers' contribution?
As I read it, it will be on both.
Both.
Yes. Because to that extent, even the employer contributes a very large amount to a person already very well placed.
Right.
That's the rationale.
Yes, sir.
Thank you. Thank you.
Thank you, sir. Thank you very much. So, thank you, Kanubhai.
Yeah.
And we'll move ahead now. I'll request Mr. Sarju Javeri to formally introduce our next speaker, Mr. Meherbun Irani ji.
Yeah. Good evening, everybody. Mr. Meherbun doesn't require any introduction. But before I go ahead, I will be taking only 2 minutes just to know how this program started. It was somewhere in 2003 when myself from Matunga Gymkhana as a office bearer and Mr. Hinesh Doshi, we just thought about this idea. Why not have a budget meet here in Matunga? Instead of going, people used to go everywhere. And that small thing somewhere in 2003 is started. And now this is 17th, 18th year and 22nd program, whereby we are jointly conducting along with Mr. Kanubhai Wellinkar. So it's a long way. And when it was started, we never realized it can go to such an extent. And people in our area, at least they look forward to for this program for the budget. And coming back to Mr. Meherbun Irani, he's an independent stock analyst with 25 plus years of experience in the market. He had a previous stint with Darasha, Centrum Broking, Nirmal Bang Investment, and he has been associated with this program for last 13-14 years. And all the audience look forward to him to get some hint and specific ideas which he can throw some light on. He has a mastery in stock selection, and basically he has a stock specific approach, which most of the people, most of the audience also likes, where he gives some stock specific idea where they can invest and make money. So Mr. Mehrabun Irani, on to you.
Sir, you are on mute, sir.
Audible now?
Yes, sir.
It was. Thank you very much for the kind introduction, Sarju Bhai. It was nice hearing my co-speakers and a word on my professor friend Kanu Bhai. You heard him a few minutes ago, and let me state that he was my professor at Jamnalal Bajaj Institute of Management Studies. And he is the person who has sowed the seeds of understanding taxation years ago. So I remain grateful to him for that. This is possibly, as Sarju said, this is my 14th year, and I have been addressing seminars now for more than 20, 22, 23 years. And I've always considered this to be an elite gathering. Unfortunately, this time I'm not going to be able to because this is a technology-oriented seminar, thanks to the COVID pandemic. I've been missing meeting y'all, quite a few of y'all. In fact, I meet on a action also after the seminar, before the seminar. This will not be possible this year. But I'm sure we will meet again next year. The advantage of a Zoom seminar is that many who cannot personally attend, physically attend for distance, for work pressure or whatever, they can possibly now tune into the seminar. So hopefully there will be many more people who will be possibly having logged in. At the outset, I wish to state something that I've always spoken my mind out. I'm a very apolitical person. I look at the positives, negatives of anything and everything. And to give credit where it is due. And like Sarjuji said that it's been 14, 15 years. And in 14, 15 years, allow me to state that quite a few members of the conveners of the seminar who possibly are affiliated to a political party, not once have they hinted or suggested that you should speak for or against the budget, depending on which side of the fence they are sitting on. Of course, it's a different issue that I say what I want to say. And if anybody tries to suggest, I don't think I'll be coming to address the seminar again. But in a world today where we all know, or we all believe rather, that quite a few media houses are affiliated to some political parties or some other party, be it the Congress, be it the BJP or whatsoever. The point is a seminar as simple as what we are having every year, yet nobody comes and suggests to you, is saying a lot for the organizers. And I wish to recognize that, acknowledge that, and salute them for that. That they have never tried to tell me what I'm supposed to be speaking. I would like to break my budget speech now into 4 or 5 parts. And considering the time constraint, quite a few of these parts, I will be not speaking for more than a minute and a half. Number 1 is the backdrop of the budget. Number 2 is the budget from the stock market view, which will possibly take most of my time. Number 3 is major provisions, some beneficiaries, some important announcements regarding the stock market, of course. 4th, I will comment maybe in 3 or 4 or 5 sentences on the budget in general, and last will be my views on the stock market. Going ahead. The budget this year, like Kanubai said something very interesting, which I heard him state in the end, that it came as a relief when the budget speech ended. And allow me to state, I was looking at the terminal, my associate was sitting around, and suddenly I saw that one of the anchors of a television channel was interviewing Deepak Parekh. And I said loudly, "Arey, budget khatam ho gaya." The reason was that nothing negative came as far as taxes go. The budget this year was presented in the midst of a pandemic which had taken its toll on economic activities across the world, including India. Even as the Indian economy, don't forget, was suffering from anemic growth, where we had witnessed 6 quarters of declining GDP and 3 quarters of negative growth, the budget was coming. Everybody knew that we will be asked to contribute, make some sacrifice here and there, and that was the state in which the budget was presented. It was just a few days after the farmers had taken the streets of India, especially Delhi, and had possibly made the government backtrack as far as the agri reforms go or agri bills go, at least for the next 18 months. Now, with that happening, possibly not many amongst us, I would like to go one step further to say nobody amongst us possibly thought that this budget will come up with the reforms which they have come out with. To call it a reformist budget, to say that it's a very bold budget, I would say is an understatement. Not an understatement, a gross understatement. FIIs had resorted to sale over the last 5-6 trading sessions before the budget came. The best of voices on television was possibly stating that short-term gains tax बढ़ने वाला है, long-term capital gains tax बढ़ने वाला है, COVID पे सेस आएगा, wealth tax आएगा, पैसे वालों लोग की बूझ लगेंगी. They may give dollops to the lower class. They will put money in the pockets of people. There will be a feel-good factor. And in the midst of all this, there was a lot of nervousness. To give marks to the finance minister, and let's be very honest, let's be very candid. Let me ask each one of us, how many marks you would have given the finance minister before this budget? How would you have rated her as a finance minister? The unfortunate part is that we have had anemic growth in the midst of which she had been presenting the budget. So the expectations are very low. She in fact went to the extent of commenting it will be once in 100 years budget. And everybody just said कि कुछ भी बोलना है बोलने दे उसको यार, हालत खराब है, क्या लाएगी वो. But in the midst of all this, the budget which has come, if I have to rate the budget from the stock market angle, I'll be coming to my general comments in the last 1 or 2 minutes. From the stock market angle, I would not like to give it 7, not 8, not 9, not 9.5, but I would like to give her a full 10 out of 10 as far as the budget and the stock market goes. The government has allowed the taboo on fiscal deficits to get broken, opting for much higher deficit. Now, if somebody wants to criticize, and I think one of the opposition leader, a former finance minister, went to the extent of saying that the economic survey suggested 7 to 7.5% fiscal deficit. How could the fiscal deficit come to 9.5%? The point is the government has believed, and this has come as a major relief to all of us, because I'm being very honest, I've gone to the extent of stating on my television shows also, or television interviews also, I don't believe in numbers, be it a GDP, be it an IIP, whatever, be it even a fiscal deficit, because when we talk of fiscal deficit, we don't talk the state deficits. But this time, the budget scores high on honesty. The budget has clearly stated that the fiscal deficit will be around 9.5%, which will go down to maybe 6.8%, and will stay in these numbers for the next 3 to 4 years. And maybe it will be only around 2025 that it will come down to maybe 4.5, 3.8, 3.9%. So it has been a very transparent as far as our honest numbers which the finance minister has come out with. Now coming to the spending part, I think this is what the market likes. What does spending do? Spending spurs growth. Stock market likes growth. I don't need to state that the market has given it a 22-gun salute. Everybody applauded. a person whom I've learned to respect over the last 25 years I've spent in the market. And I'm not feeling shy of mentioning his name, Mr. Vallabh Bansali, went to the extent of stating that this is an unbelievable budget from the stock market angle. There have been doubts expressed by the skeptics that whether the tax collections will go up. Now, if you believe that the GDP growth will be 11%, which the government believes, the finance minister believes, and it is seconded by the World Bank. Now, I'm saying be negative. Say that it will not be 11%. Say it will be 9%. Yet, there are reasons to believe that the 15% increase in tax collections targeted by the finance minister should be well achieved. I think the GST collection, which is 1.2 lakh crores last month, I think it should sustain going forward, and that itself is a big positive. Coming to the FI selling over the last 5-6 days before the budget, this type of things happen. Now, again, it's a post-mortem. I'll be honest enough to admit that even my mind got a little bit biased. You hear people, the so-supposed experts, come and go on saying कि बहुत बढ़ गया बाजार, बहुत बाइंग हो गया, तो हेज फंड्स का बाइंग था, देख अभी सेलिंग चालू हो गया, और शॉर्ट टर्म पे प्रॉब्लम आने वाला है, लॉन्ग टर्म पे प्रॉब्लम आने वाला है, वेल्थ टैक्स आने वाला है, and you also honestly start getting carried away. Somewhere you also know that over the last 20-25 years that you have seen the budget, somewhere you feel this bureaucrats end up making some stupid mistake or the other. Will some stupid mistakes happen again? So your mind also starts getting poisoned because of your past experiences, because you also believe that the markets have gone up in a hurry, and you also sit on the side. But if you think properly today, that if they had increased taxation as far as the stock market goes, as far as long-term goes or short-term capital gains tax goes, would it ever help the government in any way? The total amount which they collect anyway on capital gains tax is not very high. And if they try to increase it further, it will puncture whatever they are collecting. Not only it has happened once before, but more important is they will not be able to come up with the divestments or raise money which they are possibly targeting to collect. There are again skeptics stating that 1,75,000 crore is too tall a figure. I would like to sit on the other side of the fence and believe this will be easily attained. Also, one simple question to each one of you. When is the last time you have heard the word privatization? I use the word, it's a very bold budget, because it's not only about Air India, which you have been talking about, but she has clearly spelled out. She is going to privatize 2 public sector banks, 1 general insurance companies, and she has kept IDBI Bank out. So if you have a BPCL, a Concor happening where work is already on, if you have a Life Insurance Corporation of India, if you have a general insurance company, if you have 2 public sector banks, if you have IDBI Bank, and if you have quite a few other public sector undertakings in which divestment is going to happen, if not the complete privatization, I think the figure of 1,75,000 crores can be easily crossed. So as far as the figures go, I don't think the government is going to fall short. As I mentioned earlier, also the tax collection should also go up. The GST numbers also should sustain or should grow up further. So I think we are frankly on a very good wicket. If there are shortcomings in the budget, it is, I will start the general part right now itself, not going into the last 2 minutes, I'll mention it right now. I think the salaried class feels let down. I've been very vocal about one section of the society, and I've become a little bit emotional when I mention it year after year, and it is the senior citizens. I would like to ask this question to the finance minister. What has gone wrong with your thinking about senior citizens that you don't even think about them? Above 75 years, if you earn money from interest income and pension funds, then I will forgive you for not filing your returns. Is that enough? I think you should be generous enough in letting go of all senior citizens above the age of 70 years. Do you even understand that in this world where even ordering food is happening through an app, quite a few senior citizens, in fact, I would say a majority of senior citizens don't understand all this advanced technologies. They still have to go in an auto rickshaw to the chartered accountant's office, who will in turn will ask them, get so and so statements, get so and so statements, तुम बैंक का book लेके आया, क्या ये लेके आया, वो लेके आया. They go back, they come in again. If some statements have to be got from the post office or the banks will say system is down, come later. And they end up paying 1,000 or 2,000 rupees tax. Is this warranted of them? Why are we being not so generous with the senior citizens of the society whose blessings we need in this tough times? I promise you that the country will not lose anything in making such a simple, small sacrifice. So I think from that angle, it's a big letdown. Coming to defense expenditure, which a lot of people talk about, there has not been much of increase in outlay. I beg to differ. I think, yes, it doesn't look to be big, but we need to understand how the defense sector functions. A major order given to Hindustan Aeronautics the other day, which is somewhere around 45,000-50,000 crores. Do you think the money has to be paid all in one time? Answer is no, you just pay a small amount of money. And again, to give credit to this government, I think they recognize the problems as far as our neighbors go. And God forbid, if we have any problem, I'm sure they are alert enough to act on it. And possibly if you have to spend money at a later date, they will certainly do it. So I don't think I would take it as a negative. My negative, if any, is from the salaried class angle and from the senior citizens angle. And if I have to rate this budget, general rating, if you ask me, I would possibly give it an 8 out of 10. From the stock market angle, it would be a full 10 out of 10. Now, coming to the biggest positive from the budget, the spending part, I think it's infrastructure. The outlay on infrastructure, be it the national health policy, be it the 1,37,000 crores for roads, be it the ports, be it the dedicated freight corridors, be it airport infrastructure, I think it's all a big thumbs up. Quite a few skeptics, again, when I say skeptics, of course, they're politically biased people. They feel that, well, this was a time to create jobs. When you spend on infrastructure and the government starts with it, isn't it going to spur employment? Answer is certainly yes. अरे रोड्स बनेगा क्या फायदा होएगा, पोर्ट्स बनेगा क्या फायदा होएगा, एयरपोर्ट मेंटेनेंस से क्या फायदा होएगा? Don't you feel proud today that some of our airports, including in tier 2 cities, possibly are international class? I remember very well, it was some years ago, when I used to invite my siblings who are not based in Bombay. एक बार बॉम्बे आ जाओ यार, यहाँ का मेट्रो रेलवे से मुसाफिर करो. Today, don't you feel proud that we are likely to see metros spreading to 27 cities, including a city like Nasik? We may see a metro coming over the next 1, 2, 3, 4 years. So if this development is going to happen, money has been kept for infrastructure. It doesn't get over in 2021-22. The benefits of this will be there forever, and hopefully it can only grow. Now, coming to another sector, which I think is a very big beneficiary, and I always believe, and I always stated, I've gone on record to state not once, but at the cost of repeating myself, I've stated, market is my God, and the market always acts much before all the research analysts of this country start looking at it. Why I'm stating this is that the market has already given it a big thumbs up. Can we go further? I will come to that a little later, but I want to stress on one sector. Again, the market has given it a big thumbs up, and that is the banking sector. Not many could believe what the finance minister has done. We used to read on social media, finance minister is going to meet the PSU chiefs. She's going to be meeting the RBI governor and those type of things. And like many other things, which is being spoken about or written about the government and the bureaucrats and all, we took it with a pinch of salt. Milne de kya fayda hota hai. Over the years, I have stated, and I think in quite a few seminars, I've gone on record to state this, and I've been very, very critical of this. Okay, every year, 30, 40, 50, 60,000 crore of rupees has been spent on the capitalization of public sector banks. Kya aapka paisa hai kya? This is the taxpayers' money. The banking system, we need today efficient banks. We don't need laggards. We don't need banks to be there just for the sake of being banks and making taxpayers spend on all their follies of the past and maybe the follies of the future. In 2019, we saw the merger of quite a few PSU banks. Possibly that was the first step. The finance minister has gone on record to state that she has been in deliberation with the RBI and she is working on possibly privatizing 2 public sector banks. As I mentioned earlier, when is the last time you heard of privatization? Yeah, there will be trade unions which will come in revolt. We have seen what happened to the farmers' agitation. We all believe, and most of us believe that we are all right, that they have their own connections with the political leaders of other parties who are possibly supporting them and doing this morcha and doing this agitation and possibly putting a different flag on top of the Red Fort, a shame on us. And some of the powerful trade unions also is not going to permit this government from doing that. So yes, if you point out that the execution of all this is not going to be very easy, it will take time, it may or may not happen, this type of doubts as of now may sound valid. But I would like to state that under the present situation, if somebody has gone this far of making some bold announcements, completely bold announcements, I would say out of the blue, I think even the execution part, if there is the will, which this government has shown in a lot of places over the years, I think execution will ultimately happen. Another thing which has happened is raising the foreign direct investment limit in insurance from 49% to 74%. Is it positive for the Indian insurance companies which are listed on the stock market right now? Is honestly a little difficult to call. But this will certainly bring in lots of money, I personally believe, in this particular sector, a sector which I have used the word compounder. So if you are holding a Max Financial or an SBI Life or an HDFC Life, irrespective of the valuations right now, some of them possibly would be at lofty valuations. And I would not like to enter into an argument with anybody, but I believe they are great compounders over a period of time. And in this particular thing, when you're increasing the FDI limit from 49% to 74%, I think you can only expect more and more money to come in. The other positive from this budget, I think, is the fact that the recapitalization of public sector banks has been limited only to 20,000 crores. So that much money of taxpayers, according to me, the difference between the average over the last 3-4 years, I would call it a proper saving. Now, another thing which she has mentioned is she is talking of a holding company for banks. Now, what is the holding company? They will take over the bad loans, the bad assets from various banks, which will give space to this public sector banks to possibly give more of credit, announce better numbers. The market has given it a thumbs up. And with professionals sitting in the holding company, the banks ultimately, I'm sorry to state, I'm using this word, but banks at least will be able to salvage some money from many of these bad loans, which I and you believe is not going to get them anything. So I believe something or the other will come out for them. So the loans which have been written off, there could be a few write-backs which will come because this asset management companies, asset reconstruction companies possibly will pay them something and will possibly be able to salvage some money for these banks. Now coming to the stock market part, As far as the negatives of the budget goes, I already mentioned senior citizens and the salaried class. I feel disappointed. Defense, according to me, is not a negative because the government is aware of the problems some of our so supposed once upon a time friendly neighbors are creating for us. And as and when a problem happens, I'm sure we will possibly give a fitting reply with possibly some money, some extra money at that point of time spent in defense. As far as corporates goes, before I come to the stock market, I possibly want to make a clear, simple statement. The corporates have done a wonderful job. Post-pandemic, if you look at the numbers, you realize what I'm stating. I have read a couple of reports from foreign brokerage houses which clearly state that corporate debt is going down or has gone down. When corporate debt has gone down, they are bound to be in a position possibly to go in for fresh capex, and that is capital expenditure. So spurred by the government spending policy, spurred a little bit by patriotic feelings, the Atmanirbhar term which the Prime Minister coined for us, quite a few leading corporate groups have woken up. And this budget has possibly rekindled further the animal spirit of corporates. So I see a lot of activity happening, a lot of capital expenditure spending happening. The banks will have more room for credit. And so what should stop the stock markets from going up? The year 2020, as far as the stock market goes, was a year which I think nobody amongst us has experienced. And I promise you, at least the next generation will not experience it. It came in the wake of a not very good 2018 and 19 for the stock markets. Not many investors made money in 2018-19, but a few of them lost money. And then you had the crash of March 2020, where world markets came down between 25 to 38%. They all fell down from the levels of early March. This was unprecedented. I would like anybody to be honest enough in stating that I did feel that I should be putting in more money at that point of time. Today, well, there would be some voices who will say, of course, yaar, wo to time tha dalne ka paisa. But if you see your money coming down from 100 rupees to 40 rupees over the last 2 years, including the 30% fall of March 2020, I don't think you will have the ammunition, including courage, to put in more money. I know a lot of people who decided to withdraw from the markets in March 2020. Some people pulled out part of their money at absolutely depleted valuations, defying the concept of arithmetic. And in the stock market, one needs to understand that if your 100 rupees falters to 40 rupees, it's a drop of 60%. You take it in your stride, you say, नहीं चाहिए मेरे को यार, 10 रुपया निकाल दे. So 10 रुपया तो निकालता है जब भी तेरा 100 रुपये का 40 रुपया हो गया है. And then the market doubles from the lower levels. So your 40 becomes a 70 or an 80. It doesn't go back to 100. But for those who believed in something which my friend Mr. Modi was mentioning, Jimit Modi was mentioning in SIP, or those new investors who came in, took an app and did some masti sitting at home. Kya khayega? Pura din khane ka kya ghar pe? I need some activity also. So sala kha ke mota ban jayega. Let me try to do some masti on the market. And quite a few housewives I know came and started playing on the stock market. And they turned out to be the most intelligent investors because they saw their money growing. A lot of investors who had chickened out, but otherwise who are intelligent investors, did come as late Latifs a little late. So this additional money which came into the market, especially from the new investors and also the foreign institutional investors who was flooded with money because of the stimulus being thrown abroad, especially in the US, all that cheap money available at a very cheap rate came into riskier assets. And that additional pots of money which came into the market took the indices up. As the indices went up, quite a few people who had possibly given up on the market also came to the fore. And this additional money, the 50 becoming a 70, becoming an 80. So the additional profits also have remained in the market. They have not gone away. And with FIRs going on buying, well, the mode was absolutely like, I would use the word complacent. Everybody said, "Arey, yaar, there's a great gap between what is happening in the economy and what is happening in the market. हो जो होने दे, अपने को तो पैसा बनाना है यार, बहुत नुकसान किया." And people tried to recover. And quite a few people recovered quite well. Some have still not recovered fully. And all those people who came in fresh in the market have possibly seen their portfolios going up 50 to 70 to 80% to even 100% in the last 7, 8, 9 months. With this budget, I feel, and I have always used this sentence again in my television shows, even as far as the RBI policies go, I say कि interest rate घटेगा कि नहीं पता नहीं है, लेकिन interest rate अभी घटने वाला है, and we are in a declining trend, and that is a positive for the market. Whether it happens in tomorrow's RBI policy or not, I don't know. So this is the way I always look at the market. I look at the market from the direction angle. So directionally, I feel the budget has done a lot of positives for the stock market. First of all, the uncertainty whether new taxes will come, COVID tax will come, wealth tax will come, everything is right now behind us. The government has clearly sent a very strong message. I am not concerned as of now about the rating agencies. I believe in Atmanirbhar Bharat. I believe that growth will come, and I will take the head start by spending money. So banking problems they're addressing, infrastructure they're going to spend a lot, and I promise you I see a lot of corporates lined up, possibly spending more on capex, having brought their debt levels down very diligently over the last 7 to 8 months. So is it a blind buy to go and buy into the market? I believe there are 3 major uncertainties still staring at us. We can discount the first 2. The first is basically the second round of COVID. Can it come to hurt us? I believe answer is no. India has done honestly, relatively very well compared to the rest of the world. So even if it is troubling the US and parts of Europe right now and parts of Saudi and Dubai and others, I think India possibly as of now stands insulated. But of course, this is a concern. Whenever you write the risk factor, quite a few risk factors you like, which you know are theoretical, but you have to mention it in your research report. I'm sure Mr. Modi will agree with that. Second is the China problem. If China is aggressive, the markets can take a tumble. Answer is again theoretically yes. But again, we have a government which has been very vocal on it, which has stated that we are watchful, we are ready to take steps. They have built up their ammunition. They have spent money on defense, and possibly they also know somewhere that I can also press the button. You are not the only person who can press the button. And they have given decent answers to China. And honestly, as of now, I think more aggression seems unlikely. But this is again a concerning factor. But the biggest concern, which is very practical, is the government borrowings, the stimulus, the public spending by the government could possibly push yields up ultimately. With the RBI, which is compromising well, for the first time, honestly, I feel that we have an RBI governor who is specifically talking of growth, because over the last 20 years, and I myself have believed in it, that the RBI's main job is inflation. But here we have an RBI governor, and I want to give him marks on that, who is skewed more towards growth, which again is in tune with what the government is targeting. So when 2 people directly, indirectly are holding hands and money being flown into the economy, into the system, you will certainly see growth going ahead. Certainly, yes. But can it spur inflation? The answer is a worrying yes, which somewhere will possibly play itself out. So this is one main concern. Second concern is, of course, on the US front, because I see over there also the stimulus which has come in a big way, and more money can ultimately flow in. That also could spur inflation over there, though some websites which I saw with some foreign experts speaking that they don't see any hike in interest rates coming till 2023. And if that be the case, I think the market should have a fairly good time over the next 2 years. The practical concern, if any, is of valuations. I know a lot of people, possibly whom I'm seeing right now. I'm seeing Sarju right now, Mr. Dasto right now, Dr. Kishore Bhai right now, Narendra Bhai right now. I think this all people, all of you all invest in the market. And the easiest answer you all give to people is, boss, stock specific hona chahiye. And I also believe in stock specific always. Market महंगा लगता है यार, मुझे कुछ लेना नहीं है. अगर मैं लूंगा ना तो जुबिलेंट फूड वर्क्स लूंगा, वो पीवीआर लूंगा, उसका धंधा अच्छा है, बिजनेस बढ़ेगा. But over there, they will completely be blind to the fact, or they will not be honest to admit that these companies or these stocks are going at valuations of 70, 80, 90, 100 times. But you feel relatively comfortable or relatively safe. Well, I am buying a solid stock. So I feel you will have to be more selective. You need to understand that you are now going to put in incremental money. So because if an investor puts in money today, he's putting in at this valuations. So if I'm going to put in, say 20 lakh rupees at valuations of 80 and 100 times, will I make more than 5-10% returns if I make any returns over the next 6 months to 1 year? This is a question which every investor will have to look at. The point is directionally, things look good. The concerns, of course, are there. And I think the biggest practical concern is the inflation part and the possibility of hike in interest rates coming one fine day, maybe 3 quarters away, 4 quarters away. But that could be a concern because if that happens in the US earlier than 2023, you are certainly going to see the stimulus getting tapered or rather some withdrawal of money coming. And that is not going to be good news for emerging markets, including India. India wants to stand on its own feet, the Atmanirbhar package, the public spending package. So hopefully, if corporate earnings improve decently over the next 2 or 3 quarters, which I believe will increase, and I personally believe it will be at least a 15% growth, if not more, then somewhere even this concern may be taken care of. I won't like to mention anything specific as far as stocks goes beyond giving some simple examples, and rest assured that all the stocks, if I am going to mention in passing, they are not strictly recommendations. They are just companies which I believe will do well. They could be expensive at the present valuation. They may shed weight. The whole market may shed weight. But I personally believe the direction again remains positive. So you look out for companies or sectors which should do well. And if there is going to be public spending, I personally believe infrastructure stands out. The engineering companies, capital goods companies, maybe the pipes company, all will do very well. If you don't understand how to look at companies in this particular sector, just go and possibly buy into a proxy called Larsen and Toubro. Chala बढ़ गया, नीचे आएगा आ सकता है. But this is the stock. If you have it in your portfolio, I promise you that even a COVID will not disturb you, because you know ultimately this is a company and one of the only companies I think in the infrastructure space, which despite the policy paralysis of the previous government or whatever, has stood on its own, thanks to possibly its investments in subsidiaries in the IT sector or whatever. But this company stood very tall despite quite a few companies in this sector, including the JP Associates and the Punjloys and all coming down under. So this is a company, if you don't understand, I think go and possibly look into it. But there are other names which I think will do very well. There are names like Estel Poly, there are names like Prince Pipes, there are names possibly like KNR Constructions, PNC Infra. I believe they will all, confidently I will say that they will do well. They could have it gone up sharply. As I said, market is God and market always acts even before we start looking at them, the stock would have gone up. So they may all falter here and there, but I personally believe they will all do well. Another proxy for infrastructure would be the cement sector. And I have been very positive on it for quite some time. I believe the sector had become completely underowned. And the best way to look at it is 7 out of 10 research houses was negative on cement just about a year ago. So at that point of time, when it becomes underowned, you go and buy it. Because ultimately for infrastructure and construction to happen, you need cement. And cement is not a global commodity as such, unlike possibly steel, where the currency and everything will come into play. So cement में Ultratech you buy, expensive, साला 3,000 वाला 6,000 हो गया, महंगा हो गया यार. 6,000 का 10 होगा, आगे चल के हो सकता है. It's possibly the best company in the sector. It's the leader, institutionally owned across the country and a super balance sheet. 6,000 rupees में buy करने को बोलता, मैं नहीं बोलता हूँ buy करने को, मैं किसी को कुछ भी stock बोलता नहीं buy करने, मैं खाली बोलता हूँ they will do well, and this is possibly the leader in the sector like engineering and capital goods, Larsen and Toubro is. So Ultratech you buy, or maybe a Dalmia Bharat you buy, which relatively seems to be the cheapest, or a JK Cement you buy. They all are stocks which I believe have a lot of room for appreciation over a period of time. So cement is one sector also which I possibly would like investors to possibly look at. Then there is something called the agri-related sector. And it's not only because of farmers' agitation, but you understand very well that the MSP over the last 4-5 years have constantly gone up. Agriculture remains a focus area for the government. And I think there are companies in this particular space. You can select any agrochemicals company, pesticides company. They should be well managed. The balance sheet should be clean. Maybe an Excel Industries which belongs to the Schroff Group, completely clean balance sheet. Stock has not moved at all for the last quite a few months. One fine day it will take off. Maybe it will take off. It's a well managed company, or maybe a company like an Escorts, if you want, looking a little seemingly expensive relatively, or a VST Tillers and Tractors, a very well-managed company, super balance sheet, or a HIL Limited, which was earlier known as Hyderabad Industries Limited. Quite a few companies attached to the rural economy, attached to agriculture. I think these companies and their stocks should certainly do well over a period of time. Infrastructure, as I mentioned, it could be Larsen and Toubro, it could be KNR, it could be PNC Infratech, it could be an Adani Ports. I think they all should continue to do well. Banks may, all stocks have gone up. Will they go up further? As I mentioned earlier, outside infrastructure, if I were to mention a sector, which I think quite a few things have been done, is the banking sector. So be it an SBI, or be it even an IDFC First Bank, or any bank if you want, if you're owning it, maybe you will be tempted possibly to learn to take profits home or cut down on your losses depending on what price you bought. But there could be a correction here and there. But I personally believe, despite being very negative on the sector and the post-COVID scenario in March, April, May, I think these problems are getting addressed, and stocks in this sector, maybe after a fall or a correction, could continue to do well. So depending on what you want to buy, take your call, depending on possibly your own risk profile, which you should address it yourself, that how much risk I'm ready to take. Should I wait for a correction? I think they are all honestly very difficult calls. As I believed, I'm a man who believes in direction, and I'm a man who believes that this budget is making us feel that the stock markets over the last 2 days, what has happened, I think they are moving in the right direction. So while valuations may seemingly look a little bit expensive, we can have a fall of 5 to 10%. And when I say 5 to 10%, it can happen anytime. And 5 to 10% is not a fall. Even as some analysts on television would want us to believe it's a fall, it's just a correction in a market which has gone up a little bit too sharply. So I think any fall could be used as a buying opportunity to buy into select stocks. I think the going should remain good, unless and until there is a hike coming in interest rates spurred by inflation in the US. I don't see any major hiccups for the market, barring uncertainties like a fresh pandemic or something called a China aggression. So I wish everybody happy investing. There have been problems over the last 2-3 years, including early 2020. People felt abhi paisa kahan rakhega, market mein to nuksan ho gaya. But somewhere you believe over the next 1 to 3 years, the going should be much, much, much better than what we have witnessed over the last 2-3 years. Thank you very much. Thank you, everybody.
Yeah, Marabun, can you talk something regarding automobile sector, please?
I think the scrappage, I personally was believing it will come, the scrappage policy, and I was believing it to come for quite some months. I have got some of my own friends and relatives in this sector who are working with decent big companies, some of them listed on the market. I think I would use the word sales have picked up, no doubt about it. I would honestly like to wait for a couple of more months to see if sales sustain at higher levels. Like Hero Moto has just come up with numbers which are slightly lower than last month. We have to appreciate one thing about not only automobile sector stocks, but across the market. The market is smarter than all of us. And most of the stocks have run up a little bit too sharply. So in some of my television shows, when I was asked, I used to mention Tata Motors. And when the stock doubled, I was again asked. And I said, I will not be surprised if it doubles again further. And it's gone up again. And if you ask me today, I'll still say there is room for upside. I'm not saying it will not fall. The reasons to wait, the way to look at it is, I am a believer, and I've seen this market right from maybe 1987. And somebody mentioned, I think Mr. Modi mentioned about Harshad Mehta in some context. But I had learned one thing from him, and I was fortunate enough, I would use the word fortunate enough, to have interviewed him also when I was the business editor of a newspaper. I learned one thing from him, that you should also learn to value stocks from the replacement model. So while Tata Motors had nothing to show in it when the stock was 70, 80, 90 rupees, and now possibly it's over 300 rupees, the only way I looked at it and I justified it in one of my television shows is, तो जो दिन इकोनॉमी ट्रैक पे आएगा, आप उठ के बोलेंगे ये स्टॉक इतना सस्ता है, साला उसका जो फैक्ट्रीज बनाने का है अक्रॉस द वर्ल्ड, उसके जो मॉडल्स आने वाले हैं, जो मॉडल्स है, I think that itself is much more than the market cap of this company. Yes, it's true that the company is not going to make profits for quite some time, but it's true. But if you start looking at things from a different way, you will say it was dirt cheap in 2020. So 80 rupees has become a 300 rupees. Can it become a 400 rupees or can it come down to 250 rupees? I don't know. And that is the same answer I will give for even a Maruti or an M&M. They have gone up a little bit too sharply. There are reasons to believe ultimately with this EVs and all coming, this sector is here to do well. But from the present level to put in incremental money is a question which I personally believe each investor needs to ask himself before taking a decision, because it's not fair to say कि सारा 60 का 300 हो गया. I never look at stocks from that angle. I will say कि 300 का 350 होने का chances ज़्यादा है कि 200 होने का ज़्यादा chances है. So if an investor has a high conviction in what he is buying at the price at which he is buying, I think he is the best man who can take his own decision.
I understand, Marabun, but one thing I just wanted to say with reference to Tata Motors DVR, which is cheaply available compared to Tata Motors Limited. If you can just throw light for the benefit of all the listeners.
I would say that anything less than 35% or 30% if you get to the underlying Tata Motors share, that is if Tata Motors is 300, and if you get it for less than 110, 115, I would say I would prefer the Tata Motors DVR. At the present level, if I'm not mistaken, it's around 130 and 300 rupees, which is around 33, 34%. I think it's not it's a difficult choice between the two. Whether I buy at 135 Tata Motors DVR or 300 at Tata Motors, it's a difficult call. First of all, you answer yourself a question, which I am not answering for anybody. And I'm making clear disclosures over here that none of the stocks which I mentioned are clear recommendations. They all are indication of the direction part. They may all come down. So you buy it whenever you want. But there's a company which I do believe will do well. Tata Motors, the management went on record to state that we will possibly come out of this cash flow or the debt problem of ours. And that's a tall remark. And that was a tall remark for many industrial groups when they come out and say not many believed in Mukesh Ambani also 3-4 years ago when he mentioned. Forget that part. Let's come to Tata Motors. And if that happens, possibly the stock has a long way to go. But at the present level, defining valuations or defending valuations is honestly not very easy. It's gone up too sharply. But between Tata Motors and Tata Motors DVR at the present level, I think it's a very difficult choice. 135 में Tata Motors DVR लो के 300 में Tata Motors लेना ही है तो like if you give me Tata Motors DVR 110 and Tata Motors at 300, I will say go for the DVR. But at 30-35%, I don't think it's very cheap at least relatively cheap as compared to Tata Motors. So you can buy either of them if you actually want to buy Tata Motors.
Thank you. As usual, Mehrabun, excellent.
Thank you, Mirabun. We have some questions and we'll take up some questions. Ankit, can you help me?
Yes, I will. So the first question that has come is, how long do you think the rally in the markets would continue? Is it overheated? Would it burst and small and uneducated, ill-informed investors burn their fingers by buying high and forced to sell cheap? Some have borrowed funds to play on the market.
Is it addressed to me?
Yes, sir, it is addressed to you.
I will tell you, as far as the rally goes, I think you have used the right word, rally. Now, what is the meaning of a rally? A rally means stocks are going up sharply or suddenly, spike, or badega, ghat jayega, nobody knows. Honestly, nobody knows. Because this is all a flow of money, we all know that. The feel-good factor is back. The animal spirit hopefully is back with corporates. CapEx is going to happen. Things are good, but stock markets always learn to respect them. They go up ahead. They go up much before you can possibly think of buying. So if you believe in the little longer term, you would be more comfortable buying into it. If the person who's asking the question is asking from a rally and from a trade angle, I think I don't have a proper answer to that. I will only say that it is distinctly possible markets at any point of time, be it a 50,000, be it a 55,000, even be it a 48,000, can correct by 5, 10, 15%. I will still call it a correction. So I would use the word every fall, according to me, is a decent buying opportunity in select stocks. At the present level, I will not be surprised if the markets go up a little bit more before correcting. But if they correct, who am I to stop it? Ultimately, according to me, I have said the word. Market is a great levelizer. It brings back people back on the ground, people who try to fly when they fall. So I think people who feel that, oh, अभी कुछ होने वाला नहीं, बिंदास लो यार, and धक्का बैठेगा, साला फट जाएगा, उसका डर जाएगा वो. I am not ruling that out happening completely, because a lot of loose money is coming in. A lot of people who are possibly thinking कि चलो यार, let me also try my luck on the market. I don't think that is reason enough for you to possibly just press the button and buy more. I think if you feel the stock has a 10% downside and a 50% upside over the next 12 to 18 months, I think you should not bother about the 10% downside and buy. But if you believe that the upside is only 10% more, let me try it. Just understand one thing, that if the stock comes down by 20% also, I don't think you are going to be able to cry foul, because nobody will listen to you. Everybody is bothered about themselves. And the price at which you buy a stock is important only to you, possibly not even to your wife.
So two sectors which most of them have believed would do well post or during the pandemic are the pharma industry and the IT industry. Someone has asked, what is your view on the mid-cap pharma industry and the mid-cap IT industry?
I think the story is very, very, very positive. No doubt about it. But again, give the markets support. What happened between March and September? You yourself said it. It was the pharma sector stocks which went up first. You have forgotten the specialty chemical sector. Thanks to China, Indian companies will benefit. Then also the IT story. And I think the IT story has a long way to go, unless we have some major policy changes in the US. I think the IT sector has a long way to go. The problem is the valuations. Now, March or June, July, August के बीच में जो हुआ, and then possibly I think 3 months in a row, Reliance took over and alone went up and took the Nifty up. So we saw pharma, IT, Reliance, IT, pharma, specialty chemicals in between, and only these 4 horses were running, the others were laggards. Somewhere the other sectors also are catching up. So pharma, if you look at things properly, is possibly taking a backseat for the last maybe 15, 20, 30 days, with the other sectors and other stocks coming into fore. But I still believe there are a lot of decent, attractive pharma stocks. which should do well over a period of time. A name which comes to the fore, again, clear disclosures, personally owning it for quite some time, no intention to sell it, intention to buy more of it as and when I have some money in my pocket. And that would be a company which is the Baroda-based Alembic Pharma Limited. I think at 950, 940 rupees, 960 rupees, I think there is a lot of value in it over the longer term. So if the stock is a 2000 rupees stock over the next 3.5 years, 2.5 years, I honestly will not be surprised. So if you are selective, despite this sector being overcrowded with investors jumping onto it, ignoring the other sectors, and somewhere now some commuters are coming out of the train. So this will give a buying opportunity. Answer is yes, I remain positive in the sector over the longer term. And allow me to state I was very negative on the sector between 2012 to 2018, 2019. I turned positive only in the last 1.5, 2 years. And I think some of the stocks, while they have climbed up very sharply, a correction in them should offer opportunities. Another name would be a JB Chemicals or a Dr. Reddy's. I think another 100, 200 rupees down would be a decent buying opportunities if you are an investor the way you claim to be. But if you are a short-term trader and say, "Sala mera bun kya bol ke gaya, sala mere ko 100 rupees ka nuksan ho gaya," I don't want that to happen. So this is a sector at the present valuation. If you believe in the longer term, both the sectors, there is still a lot of scope for them to go.
Jimit, I'll ask the next question to you. There's a question on what is the outlook for the FMCG sector, particularly stocks like Britannia, HUL, and Nestle. They have not participated much in the rally. Any specific reasons?
So I think as far as the FMCG sector, they are traditionally expected to be more defensive in nature. And since September to mid-September, since when the market has actually gone up about a good 35, 30, 40 odd %, it's all been about cyclicals. So it's been entirely cyclicals and banks that have done well. So a lot of these names. So Britannia, in fact, was quick to fall during the March 2020 fall, and then it was back up to $3,300 in May itself in a couple of months. So fundamentally, I think all these names that you took are likely to be good 15-20% compounders. But don't expect, so right now it's a phase where people are quite gung-ho on infrastructure spending, cement, a lot of these cyclical names. So in this period, these names are likely to underperform, but which will actually mean that it's going to be a great opportunity for somebody to get in if they want to compound their money for the next at 15-18% for the next few years.
And Jimit, what is your view on the metal sector? Again, one of the cyclical sectors that we've seen.
So metals, I think we are looking at in terms of the cycle, there has been, we believe that there's going to be a good rise in commodity prices across the board. So I think every commodity practically we should do really well. So whether it's aluminum, whether it's copper, zinc, all these businesses, all these commodities will probably see a huge uptake because of the general liquidity cycle, general increase in infrastructure spending across by governments. So I think a lot of these commodity companies will do well. The only caveat being that they will be only trading place. So somebody has to be very careful when you are looking at commodity sector businesses. So if you are looking at, you'll have to be able to time the market really well, get in and get out. So you can't buy a commodity stock and forget for 5 years. If you buy and forget, then it may so happen you buy something at 100, it'll go up to 200, 250, and in 5 years it'll be back at 100. So you'll probably have missed that. So that's why it's called cyclical, right? So it's important to get the cycle right. We probably are at the beginning or the middle of the cycle as far as the commodities and metals are concerned. But yeah, they're a trading bet as at best, and not for long-term investing.
Mehrabun sir, there are a couple of questions on your views on the chemical and the API segment.
Again, this is a sector which has got a little bit overcrowded. It's cooling off, and there are quite a few good names in this. Allow me to state. API I will include some pharma names also if I have to, but this is a space again in which there's a choice of plenty. Again, have they corrected enough? I don't have an answer. Nobody has an answer. But if they correct, I think you will get at lower valuations. That's it. But at the present valuation also, I think there's a decent room for upside. Like look at a name like Jubilant Life, great company. वैल्यूएशन 700 वाला 900 हो गया, 950 हो गया, लोग क्या 1100 होगा, 1200 होगा, 1400 होगा, 950 का 800 हो सकता है, किसको पता है. So if one doesn't care for those type of falls or corrections, I think there are quite a few interesting names, like maybe there are names like Naveen Fluorine. If they fall a little bit, 5-10%, they can provide opportunities. There are names like Valiant Organics. There are a whole lot of names, if you allow me to state. The point is, do I have any proper selection at this moment or any name to mention? I think maybe tomorrow morning, if you ask me, I will have a different name to mention it. In short, there is no specific name right now. There are quite a few names which are good, and quite a few of them are seasoned companies, and only companies which can possibly take advantage of more and more incentives coming their way because of the problems concerning China. So I think this is a sector which got a little bit overcrowded. You felt like buying a stock at 300, it went to 350, it went to 400, it went to 500. Now 500 ka sala 450 ho gaya, abhi lo kya aur correction kara dekho. Those type of questions will disturb you. So don't look at historical stock prices in this sector, because if you look at historical stock prices, you will never be able to buy into them, because quite a few of them, if you look at the 52-week low or the 104-week low, sala 100 rupiya tha, 700 rupiya mein lo kya, pagal ho kya. Or if you see 900 rupees high and you say at 700, 200 rupiya correct hoga, abhi leta hu main. So it's a question, again, it's your own perception. Again, somebody had asked me a question on IT and pharma. I think even specialty chemicals, according to me, is a sector possibly which will continue to do well. The question is the stock prices, which can flutter a little bit, 10% on the downside or 15% on the downside also can happen, depending on the overall market if it corrects. But certainly they will be higher, especially the well-managed companies, as compared to where they are today.
Sir, another question directed to you. One question which I believe everyone wants an answer to, never found one. What typical asset allocation would you suggest between equity and debt, apart from the 100 minus age formula, for an aggressive investor?
Well, it's not fair on my part to say this, but I always believe in being very honest. And I would say that you have to believe me when I'm saying this, because I don't like to lie. Not because I'm a Zoroastrian alone. Mr. Dastur will smile on this. But otherwise also I'm very straight. I think 98% of my money is in equities. I said it enough. But I'm not saying everybody should do it. And I think among the concerns which I mentioned earlier, which includes the second round of COVID or COVID strain, which people term it, maybe China aggression, and the third factor which I mentioned of inflation interest. The fourth factor which I'm a little bit concerned about is the state of some of the schemes of some of the debt mutual funds. I'm told there is a lot of trouble going ahead. If that is taken care of, I think this concern will not come to the fore, and let's hope it doesn't come to the fore. So in the prevailing scenario, I think where there's a distinct possibility of interest rates going up over a period of time, if you're getting things at a very low rate, possibly go ahead and buy into some of this debt schemes, provided you believe that you are, as far as you are in a boat which is not going to shake too much. But personally, if you ask me, I'm a man fully of equities. I think Mr. Modi was mentioning something very interesting about metal stocks, cyclical. He was mentioning correctly that anything can happen at any point of time, though right now we're in the middle of a cycle. Now, whether we're in the middle or the last leg of the cycle, again, it's a difficult call, because a lot of things, believe me, happens because of the currency also. They are global commodities, unlike maybe a cement or maybe even to some extent a sugar. But coming back to your question, I would like to state that it is not very easy for a person like me to put his money in debt. I always believe in taking advantage of sharp falls in the market and holding on to it till the time recovery happens and things go up. I believe in the falling value of the money. And if you buy anything and everything at 100 rupees, over a period of 10 years, if that 100 rupees is going to be worth only maybe 30 rupees or 40 rupees, then certainly you will get an appreciation mainly for that factor alone. So if you have a decent company, decent business, not too much of problems in the balance sheet, and a promoter, and that's very important. How many promoters you trust is your problem, but I don't believe too many people. And if you have a promoter whom you trust, I think, well, I don't see any reason why you should not make money which exceeds the returns which you earn on debt. So that is a feel-good factor, especially at a time when the market has the problems which we saw in 2020 or even in 2019. It makes you feel that कुछ नहीं तो मेरे को पैसा वापस मिलेगा यार. Equity में तो मेरा हालत खराब हो गई, 50% down हो गया. Those type of things makes you feel better, and if you makes you feel good, makes you sleep well, then possibly a 5 to 20%, 25% exposure in debt possibly you can take. But I would possibly go in with the yellow metal. I somewhere feel bull market is ahead of us even as far as gold goes. So while it has taken a backseat considering people have become a little bit aggressive on equities, I don't think gold would be a bad bet. So if you ask me, I would select equities at number 1 and gold at number 2 with a little bit of exposure just for the sake of your wife who always tells you put some money in fixed instruments यार. Equity में पैसा कभी घर पे नहीं आता है. तेरा 1 करोड़ का 2 करोड़ बन गया साला 10 लाख भी घर पे देता नहीं है. At least interest तो मेरा बैंक अकाउंट में आएगा. So if that be the reason, you can put some money in debt. Now this is the way I look at it. Maybe Jimit or somebody else over here would possibly have a slightly different view. I'm a man 100% of equities if you ask me.
Ankit, 1 second. I just want to ask Jimit and Marabun, both of you, considering this Atmanirbhar program, do you think that the startup companies which are coming in India have a huge, tremendous advantage over this equity market in a year to come? Like,
so my personal view is that because of the entire Atmanirbhar Bharat scheme and because of all the improvements in as far as compliances are concerned that have been undertaken by the FM, in generally investing in startups will be beneficial as compared to investing in direct equities. However, I think the challenge is how do you get access to a pool of good startups from investing point of view. That's the biggest challenge, in the sense that, so even historically, if you see in the United States, a portfolio invested with a good venture capitalist has ended up delivering above 60-65%, whereas the S&P 500 on historically has probably done only 12 to 13% on a compounded basis. But the challenge is how do normal investors like you and me actually get access to a bouquet of these good startups. So that accessibility is always going to be a challenge. But having said that, if you are a startup founder, like me, for us, there has been no better time. It's probably been the best time in the past 20-25 years to be a founder and to build a business, because the amount of resources in terms of capital, talent that is available to us in today's day and age is far better than ever was. So great time for startup founders and investors.
yeah, Jimit, because I was just trying to share with you where Vallabh Bansali also have been one of the investors in 9 unicorns. They are the people, those who are giving a huge platform for the new startup company in India, Marabun, what do you think about startup companies?
I think a long way to go if you ask me. I think private equity or whatever, I don't know the name which you can give for startups, is something in which the rewards are super, but the risk are also very high. And in a country like India, where I personally believe people are relatively smarter than the rest of the world, I think a lot of people will try to take advantage of it and try to make a fast buck. As far as private equity companies also go, what is the accountability for them as far as investing in the right startups go? So anything and everything can happen, not only in India, but across the world. But if you invest, of course, in the right venture, I think the returns can far exceed what you can possibly earn in secondary market. So I'm all for it. I think it's a long way to go. But for a retail investor, I think there are not too many opportunities right now. So possibly if there is a fund which he believes in and which is investing in startups and he's ready to take a wager a little bit of risk in that, I think, well, I would wish him all the best and say that if he's on the right track and if he's in the right investment, if he has made the right investment, right venture, then possibly his experience over there could be much better than what he has possibly earned in the best of times in the secondary market also. But the risks are certainly much higher than what your risks are in the secondary market.
Thank you.
We can end. I think we can end, Mehul bhai. I think it's already 8:10.
Yeah. Thank you very much to the panelists. And I will request Ankit to now present a hearty vote of thanks to well-deserved vote of thanks to the speakers.
Thank you, Mehul bhai. It is indeed an honor to be present amongst all the panelists that are here today. I have been assigned the pleasant task of giving the vote of thanks. I, on behalf of all the associations, uh, really thank all the three learned speakers, Mr. Jimit Modi, Sri Kanubhai Doshi, and Sri Mehrabun Irani ji, for accepting our invitation and enlightening us on the various topics on such a short notice. It has indeed been a pleasure, and the amount of questions that are coming in, still they are being keyed in as we speak, speaks about the whole learning experience it has been for all of us together. I would also take this opportunity to thank all the participants for giving us such an overwhelming response and encouraging us for organizing more and more such uh, seminars. And thank you, Hinesh Bhai, for being the pillar between all the associations and taking the charge and letting all of us come together in organizing the seminar. Thank you, everyone, again. And with this, I would take the permission of ending the session.
Thank you. Thank you, everyone.
Thank you, everybody.
Thank you.
Everybody.